Good evening, everybody. Welcome back to my channel. It is me, the Millennial Investor 1914. Holla at your boy. Welcome back to my channel. We here. We about to get this money. I got my Phi Beta Sigma hat on. I just been wanting to wear my Phi Beta Sigma hat because, as you see, it's new. And as a kid in the candy store, when you got something new, like a new watch or a new car, new new hat, gotta rock it. Gotta rock it. I live in Houston, Texas, baby, and it's pretty much hot like every day. So I don't get the chance to always pull out my paraphernalia, my Perry. Well, what we got right here is my dividend portfolio stock update for the month of January going into February. What you'll see is that I've made some new key changes, all for the best total return. And the last portfolio update revealed I was at 69,000 slash 70,000. My portfolio has increased to 4,000, 74,000, and I'm not going to act like it's any surprises. I did just drop $925 a couple days ago, so that does help as well. So I'm not going to pretend like that doesn't help. As right now, my portfolio is up 3.02% year to date, which is good. Compared to the SP 500 3.29, which means that I have ample amount of leg room for my portfolio to sky and just go to the sky, and just at least I can get, if I can get around 18% to 20% rate of return for my portfolio, I can rock with that. We can rock with that. Let's unveil and go deeper into my portfolio. My top stock in my dividend stock portfolio is Broadcom, AVGO, with Microsoft as a close second, SCHG, that's Schwab's U.S. Large Cap Growth ETF at $9,456. I'm about to drop $500 into this bad boy this month, $500 into that bad boy next month, and then I'm just going to leave it alone and just let $10,000 in SCHG grow and compound for the next 10, 15, 20, 25 years. And hopefully this bad boy can at least be about 200,000. I'll be cool with that. I'll be cool with 200,000, right? I have goals. I have SCHD, Schwab's U.S. Dividend ETF. And in this bad boy, I'm buying some here and there. I'm buying $200 a month, $150, $50, whatever I got. I get some extra money, put into SCHD. That's the dividend play. I'm already knowing SCHD is probably going to go up probably 5%, 6%, maybe 8% max. It's not going to be like SCHG. It's not volatile. Then I'm rocking with American Express, TSM. I got VGT. I'm growing VGT so that in the future, in 15 years, I can sell it and I can use it to pay my student loans. Bam, bam, boom. And I'm paying on my student loans on the monthly basis right now. But yeah, I'm just growing it, and then I'm just gonna just do one quick once the dividend and of VGT get to a point where it's long term capital gains. I'm gonna sell that bad boy, wipe out my student loans, and that's one less debt that I have to worry about. The last thing I have to worry about would be my mortgage, which is $150,000. Still got a ways to go for that. Lastly, you got my bad boy Aflac, United Rentals. Then you got my tech stocks. We have Meta, Nvidia, VOO. I'm using VOO as just a personal bank account. So think of just VOO as a bank account. Whenever I get extra money, I'm using that $500 per month, $1,000, and because I've already reached my limit for my emergency fund. So anything extra, I'm just gonna just dump it into VOO and use it as like a checking account, a bona fide checking account. And then my growth plays that's highly volatile that I'm betting in the future. I mean 10 years plus is Tesla, Cloudflare, Palantir. One of these three, or all three, is going to make me rich and is going to propel my portfolio into 20%, 25%. Fingers crossed. Now, let's talk about the dividend income that I made for the month of January. Didn't make a lot. We didn't make a lot at all. We could talk about it. We can talk about it. Let's talk about it. So the dividend income that I made for the month of January was roughly $10. Now, uh, just so you guys know that I get paid. So the months of January, April, um, June, and October, I get paid from TSM. Now, recently, I did buy JP Morgan Chase because I wanted to get this month dividend up, but then I realized, okay, I can invest into JP Morgan Chase, which is doing really good. Jamie Dimon is the CEO of that company, doing is really good. And I was also going to invest into Morgan Stanley, but then I saw a big investment in Tesla because Tesla has been down 35% from its high of like $450 or $475. Tesla right now is at 350, but it was falling to 360. And I thought in 5 to 8 years, Tesla is going to be the stock is going to produce higher rate of return than J.P. Morgan Chase. 500 potential 500% increase compared to maybe 200 or 180% increase for JP Morgan Chase. I'm going to go here because I'm trying to retire at age 50, by age 50. So that's why. So for the month of January, $10. And then for this month, my two go-to stocks like for February is some American Express and United Rentals. Again, I was going to invest into Morgan Stanley, which is a 3.5% dividend yield, and that was going to make money. But then again, I decided to double down into Meta, Nvidia, the Magnificent Seven, because my net worth is growing like crazy, and I'm trying to keep momentum. So what you see is that my biggest month of dividend income is the third month, which is not too shabby. That is still growing. That's still compounding, especially with me consistently buying SCHD as in dog every 3 months. And as right now, my annual income is $777, and I average roughly $194 a quarter. I'm gonna get that up. My income is getting up. So make sure you like and subscribe. I'm investing for a total return, as you see, and my portfolio is growing. Hopefully by the time this year, my portfolio will be at 100,000, and I can see the compounding. But everything is all good. A year ago around this time, my portfolio was at $53,000. Now I'm at 74. So I'm making moves. I'm making progress, and we getting this money, especially as we are trying to beat the S&P 500. So rock with me, Phi Beta Sigma. Rock with your boy, Millennial Investor in Finance, 1914, and I'm out. Share my content. Bye.